Hello guys, welcome to the accounting class. The topic is static and flexible budget. This topic is being taught in the cost accounting somewhere, and somewhere it is also included in the managerial accounting. So this is a very important topic which comes under both the accounting, whether it be cost accounting or managerial accounting. So if you study this topic, this will be helpful for you in both the courses, the cost as well as managerial accounting. In this video, I have created some multiple choice questions and I have explained you how to solve them with suitable examples. So now let us begin the video. The first question is, which of the following does not define a budget? So here we have to give, there are four options. As per the budget, which of the four is not defining a budget? It is a financial plan. Yes, it is a financial plan, so it is defining. It cannot be our answer. Second is, it is a translation of the organization strategies. Yes, it is true, so it is defining budget. Third option, it is a method of communicating. Yes, it is also true, it is defining. The question is, which does not define? The option 4, it is based upon actual results. It is not defining budget because budget is prepared before the actual operation. So it cannot be based upon the actual results. So the correct option will be option number 4. Now the next question, a series of sequential steps followed to create and use budget is called. What we call that sequential step? Budget process? No. Budget progress? No. Budget decision? No. The correct answer is budget cycle. We call them budget cycle. Budget cycle is a series of sequential steps followed to create and use budget. The third question, a statement is given. Assign responsibility and reward employees for achieving budget targets. This statement belongs to which of the four levers of control? Belief system? No. It belongs to boundary system? No. It belongs to interactive control system? No. It belongs to diagnostic control system. This statement is correct for the fourth option. Next, which of the following is not true? Remember, the question is asking you not true for a master budget. Master budget is a comprehensive plan for upcoming accounting period. Yes, it is a comprehensive plan because it is a detailed plan. It gives you too many budgets in it. It is prepared for a period of 10 years. No. It is not prepared for a period of 10 years. So if the question is not true, so this second option is not true. We have to see the other option as well. It is based upon the series of budget assumption. Yes, it is true. It consists of several subsidiary budgets. Yes, it has many subsidiary budgets. So as per the question, the second option is correct because the second option is not true for a master budget. It is prepared for 1 year. In the second option it is written it is prepared for 10 years. So this cannot be true. Question 5. The operating budget is created by preparing several individual budget in proper order. In proper sequence, one after another. Which of the following is prepared first of all? So in that order, which budget is prepared first of all? Is it production budget? No. Is it direct labor budget? No, of course not, because labor and material will come after the production. So if the production is not first, so of course labor budget will not come. Overhead budget? No. It is the revenue budget. First of all, we have to prepare a revenue budget based upon the expected sale. So we prepare first of all the revenue budget and then we move to the other budgets like production budget, material budget, labor budget, overhead budget, etc. Next question, a master budget consists of, it is asking you in a master budget what are prepared. See, master budget has two budget, basically broadly it has two main budget. First the operating budget and then the financial budget, operating and financial. So it consists of operating as well as financial both. So the first option is operating, it is true but partially true. Financial budget, yes it is true but partially true. If you click the option 1, it will not be fully correct, it will be half correct. Option 2 is also half correct because option 3 is there. In option 3 both are there, operating as well as financial. So 3 option is the most correct answer. Cyclical budget, no, there is no cyclical budget any. So the correct option is operating and financial budget. Which of the following budget is not included in the operating budget? There are several budgets in operating budget. So it is asking which is not included in the operating budget. In the operating budget, first of all we prepare the revenue budget, so it is included. It is asking not included, we have to see not included. So operating budget includes revenue budget, yes it includes. It includes production budget, yes it includes. It includes direct material budget, yes it includes. But operating budget does not include capital budget. So as per the question, our correct option is capital budget. Capital budget comes under the financial budget, it is not an operating budget. 8th, the first step in preparing a master budget is to prepare. So as I discussed you in some of the previous question that first of all we prepare a master budget. Okay, in the master budget we have two budget, first operating and second financial. Okay, in the operating budget we make several budget. In the operating budget first of all we make revenue budget, then we make production budget, then we make direct material budget, then we make direct labor budget, etc. So if the question is asking in the master budget what you prepare first of all, so in master budget we prepare first of all operating budget, in the operating budget we prepare first of all revenue budget. So our correct option will be the revenue budget, the second one. Okay, production budget is prepared after revenue, selling and administrative expenses are prepared after various direct material and direct expenses budget. So the correct option is revenue budget is prepared first of all, option 2. Now customer service budget. In the operating budget we have several budgets. So one of the operating budget is the support department budget, and customer service budget is one of the support department budget. So I see here option number 3, the correct answer is option number 3, support department budget. Now question number 10 is a numerical question. It is asking that STU Incorporation makes toys and sell it for $8 per unit. This is the selling price, remember, and it expects to sell 4,500 of toys in December 2023 and 5,000 in January 2024. It is asking the budgeted revenue for December, not for January. Remember, it is only for December. So for December, how many units? It is expecting 4,500. So expected sale for December is 4,500. Okay. Now selling price per unit is 8. Okay. Now if you multiply the units to be sold with the selling price, you will get the result, that will be 36,000. So this is your budgeted revenue. This is your budgeted revenue. Where do you find 36,000? I find it in the first option. So the first option is correct one. there is a company Tortoise Inc makes tool to be used in a gaming station. It sells it for $15 per unit. It has 600 units in the beginning. So beginning inventory is 600 on April 1, 2023. It expects to sell 7,500 during the month of April. So there is an estimated sale of 7,500, that is a budgeted sale or estimated sale. Tortoise Incorporation wishes to keep 800 units as the ending inventory. So 800 is ending inventory for the month. Determine the units of production required. So how many units you need to produce for that month? Okay. So first of all you have to take the sale, expected sale unit. Okay, in units it is 7,500. Okay, then you have to add the ending inventory. Okay, ending inventory is how much? It is 800. Now after adding you get 8,300. Now you have to deduct the beginning inventory. How much is the beginning inventory? It is 600. So after deducting it you get the units required to be produced, that you get 7,700. This is the units required to produce. Units required to produce. 7,700 is in option number 2. So our correct option is 7,700. The other options are automatically wrong. Now the next question is question number 12, which is also a numerical question. If the required unit of production is 3,000 for a manufacturing product for the month of September 2023, the product uses 0.3 hours of direct labor at a cost of $9 per hour. Compute the budgeted cost of the direct labor for this product. So what are the units? 3,000 units. Okay, 3,000 units. For 1 unit you need how much hours? Hours needed for 1 unit is 0.3. Okay, so you need to multiply with this. So you will get the total number of hours required for producing 3,000 units. So total number of hours required will be 900. Okay. Now what is the rate of labor? $9 per hour. So 900 is the total hour and the rate is $9. Okay, rate is $9. So multiply with this, you will get $8,100. This will be the budgeted cost of the direct labor. So 8,100 is your answer. It is in option number 3. The other options are wrong. We have to choose option number 3. Question number 13 is also a numerical question. Belley Incorporation has prepared a budget for its product to be manufactured for quarter ending on December 31st, 2023. The budget shows budgeted cost of the direct material 9,876, cost of the direct labor 16,547 and total budgeted overheads to be 107,327. So we have the direct material, direct labor and overhead, and the production budget shows that 5,350 units are required to be produced. So these are the total cost for 5,350 units for that budgeted quarter. You have to determine the manufacturing cost per unit. So first of all we have to find the total cost. Okay. So for total cost we have to write the direct material, that is 9876, direct labor it is 16,547, and overhead is 107,327. Now you have to add it. After adding we get 133,750. This is the total cost. Total cost of how many units? Units are 5,350. Okay. So for per unit cost what you have to do? You have to divide. Dividing by this units you will get the result. After dividing you will get 25. You can check with your calculator. 25 is the per unit manufacturing cost. So where do we get 25? It is no. It is third one is also wrong. So option 4, 25. The fourth option is correct. It gives the $25 per unit cost of production. Now the next question is asking you the equation total units of direct material to be purchased. For purchasing direct material for production, what equation will you use? For purchase of the direct material you should start with the production needed. How many units you need to produce, accordingly you have to take the direct material of the production, then you have to add the desired units of the ending inventory, then deduct the beginning inventory, beginning direct material. So the first option I find is the correct. I can check the other option, production needed in the units in direct material minus desired unit of ending, it is minus, so it is wrong. The third option plus desired ending inventory is okay, but plus unit in the beginning, this is also wrong because it should be minus. In the fourth option minus desired ending inventory wrong, plus beginning it is also wrong. So only the first option gives the true equation. The correct option is the first one. 15th question, differences between budgeted and actual results are. What we call the difference between budgeted and actual result? Budget performance? No. Budget variation? No. It is quite similar to that word, but it is not the exact word. Budget variance? Yes. Budget variance is the right answer. Budget estimate? No. Because it is asking the difference between budget and the actual result. So budgeted and actual result, the difference is called variance, budget variance. Option 3. 16th question, which of the following is not true? It is asking not true. Okay. So with reference to static budget, remember static budget, it is prepared for a single level of sales. Yes. So it is true. We cannot say it is not true. So this may not be our option, our true answer. So first is not the answer because it is true. We have to check not true. It is prepared at the beginning of the year. Yes, it is also true. Difference between actual results and the static budget is called static budget variance. This is also true. So all 1, 2 and 3 are true. So of course the fourth one will be not true. We have to see. Static budget is prepared in accordance with the actual level of output. No. Static budget cannot be prepared in accordance with the actual level, because static budget is prepared before the actual output, before the actual production. So any budget prepared before the actual operation cannot be based upon the actual. So option 4 is the right one because it is not true with reference to static budget. 17. Which of the following is not true pertaining to flexible budget? Not true. It is prepared for multiple levels. Yes, that's why its name is flexible budget. It is true. So it cannot be the option. It cannot be the correct option. Difference between actual results and the flexible budget is called flexible budget variance. Of course, it is true. Flexible budget is prepared only at the end of the year. No, no, no. It is written only. Flexible budget is prepared two times. Before the actual operation, that means in the beginning of the year, and also at the end of the year. So it is written only. Because of this word, this option is not true regarding to the flexible budget. So we will have to choose this one. But we have to see the fourth option also. Flexible budgets are used for sensitivity analysis. Yes, it is true. So the not true relating to flexible budget is option number 3. Now question number 18 is a numerical question. A static budget for 1500 units is given below. Using the information from this budget, determine the amount of operating profit at sales volume level of 1800. Here is a budget for 1500 units. We have to prepare a budget for 1800 units and find this operating profit. So for 1500 units, the sales revenue is 15,000. Okay. So for 1800 units, the sales will be 18,000. Isn't it? Why? Because see here, 15,000 is the sales revenue for 1500. Okay. So if you divide, you will get 10 as the per unit sales revenue. So for 1 unit, the selling price is 10. So for 1800, it will become 18,000. Okay. Variable cost also you have to find. 4,500 is the variable cost. This is for how many units? 1500 units. Okay. So dividing by 1500, you get 3 per unit variable cost. So for 1800, it will be variable cost will be 1800 into 3, that is 5400. Okay. So I will write here. And so after deducting the variable cost, we get contribution margin. We get contribution margin, that is 12,600. Now we have to deduct the fixed cost. You know the fixed cost. Fixed cost is same for all levels of output. See, it will be same 6,500. So if I deduct 6,500, so what we get? We get 6,100 as the operating profit. Operating profit. So our correct answer is 6,100. Where is it? It is in option number 2. So the other options are wrong. The correct option is option number 2, 6,100. This is the operating profit at level 1800 units. Now question number 19. When managers set targets so low that goals can be met easily, this results in budget rationing. No. Budget slack? Yes. Budgetary slack. The second is the correct option. Budgetary participation? No. Beyond budgeting? No. So correct answer is budgetary slack, because it is so easy to achieve the result. The budget was so low. Now budgets prepared frequently for overlapping time periods is known as overlapping time period. Yani budget, if you are preparing for 3 months, suppose one budget is for January, February and March. The other budget which is prepared for February, March, April, then March, April, May. So you will see that 1 month is overlapping. See that February is coming 2 times in this budget and also in this budget. Similarly, March you will see comes in 3 times. in this budget and also in this budget. See, April also will come. So one period is overlapping to the other. So this happens in which type of budget? Kaizen budget? No. Activity based budget? No. Rolling budget? Yes. The correct option is rolling budget. RCA budget? No. So this budget is called rolling budget when the periods are overlapped. Now the last question is for you to do. When top managers set targets too high, that employees have no motivation to achieve this result. The target is so high that it becomes difficult for employees to achieve, so they don't have any motivation to work hard to achieve because they know that it is impossible to achieve. What is this situation? What we call it is budgetary slack, it is budget ratcheting, it is budget manipulation, or beyond budgeting. What do you think is the correct option? You should write in the comment box. You can also share it with your friends. Thank you so much. See you in the next video. Till then, good luck. Bye bye. Take care.